Welcome to Invest. We talk about investing, finance, a professional woman. It's record time of 9:49 a.m. on the Eastern Time on the 6 days of this year, 2023. Hope you guys have a great week so far, and also Happy New Year's. With respect to Ethereum, $100,246, down about 0.35% so far. On the over crypto market, it's relatively muted, but we are being, we're maneuvering through a specific catalyst today, which is the job numbers that came out as of 8:30 a.m. this morning. And you could see that on a high level, just on CNBC specifically. Seems like it was a positive number. Non-farm payroll has risen by 223,000 in December. A strong job market tops expectations. And then with respect to the overall equity market right now, despite the crypto market has been relatively muted, it directly correlates to the equity market, which you could see that across the spectrum right now. Obviously a kind of a mixed bag, but I would say the majority of the stocks are in the slight green territory as we're still digesting the payroll numbers on both a non-farm and a farm perspective. But the main catalyst that we need to really look out for January, has not really happened yet, right? It's going to be happening on the last day of January and the first day of February, which is the FOMC meeting. And that will tell us the outlook from the Fed's perspective on how we're going to be triangulating with the uncertainty of the inflationary pressure. Now with the ominous, growing affectation around the COVID situation, seems like it's obviously hindering China specifically, but obviously with respect to the spread potentially onto the U.S. Climate and ecosystem as well. In addition to that, let's take a look at other news before we dive in on the high level synopsis on the job report, which we can dive into it. So let's just, it seems like nothing really specific, but obviously, the automakers, which, Q1 is typically more of a depressed quarter in comparisons to other quarters of the year due to the fact that a lot of automakers are made globally, and China, which is one of the key drivers of the automaker economy, is that the February month is going to be technically halved due to the fact that it is Chinese New Year or Lunar New Year's, depending on how you want to put it. It's basically the same thing. That Chinese people will be taking time off, so that means factories will be shut down. And also, people don't really buy cars or want to buy cars during winter time. People typically like to buy cars, just on a domestic perspective, from drier and warmer area like Miami, like Texas, because the car conditions on the East Coast is a lot more wet and a lot more damp, which can further deteriorate the metal parts of a car for obvious reasons, just basic science, right? So we'll see how the automakers' earnings will unfold, despite what we have seen, the worst couple of months and quarters so far for auto sales due to the supply chain issues, which subsequently hinder the profit margin potential that they should have been able to generate from if you just look at that in more of a decade perspective, right? So let's just dive into the job report. So before I do that, you can see that the verbiage here, right? So I will highlight this verbiage, and I want to show you something really cool that I just discovered recently. So I'm going to copy and paste, copy, right? And I found this AI tool recently, and the AI tool is still like a demo version, and you can see that I copy and paste it here, right? And this app is called Descript. Feel free to download it. And what I did is basically I uploaded a 15-minute video of me talking, so just like one of my typical YouTube video. And next thing you know, they use the AI machine that they have, and they train the data, right? And now the computer can speak on my behalf, right? So I can just show you. So you can see that I copy and paste the verbiage that CNBC has laid out here, right? It's the same thing as on the key point section, right? So let me just play it for us, and you could see that there's some gibberish that is That is because I'm using my freemium package that only have 1,000 words and vocabulary limits, so it doesn't exceed that. But let me just play it for us. And this is pretty scary stuff. Non-farm gibber increased by 223,000 for the month, above the Dow Jones estimate for 200,000. The unemployment rate fell to 3.5%, an applesauce of jabber 0.2 percentage point, and also better than the estimate. Wage growth was below expectations, with average hourly jabber up 4.6% from a year ago, below the 5% estimate. Leisure and gibber led job gains, followed by healthcare, construction, and social assistance. So as you can see, there were some words in the overdupe, which is what they call it, contain some words that they cannot pronounce, right? But let's see if I was to type in welcome, like, let me see. Well, my keyboard seems like it's kind of not moving the best. Welcome to Things Invest. Let's see if it can play. And this will show you right away, but I'm not sure if they can actually capture it the way it is. As you can see, like below, it is slowly converting right now, right? There's a blank box right here, and it's converting video right now. So let's give it some, see, there we go. You can see that it's slowly converting, and it's downloading right now as we speak. But you can see that it came out. So let's see what this sounds like when I'm typing this out. Welcome to Tings Gibber. You see, it doesn't even pronounce it well. Maybe I need to train the data a little bit more to convert my sound a little bit more. So anyways, that was just a demo, but on a high level, that was not the topic of our video today, and apologies for taking over, out of topic. But it seems like the report came out to be positive, but with respect to the payroll number for December, we do have to kind of take that with a grain of salt, right? Because of the fact that December is typically a stronger market month, because of holiday season, because of travel. So travel and leisure, combined with a higher consumer purchasing behavior because of holiday gifts and spirits, it has drives some sort of an outlier compared to the rest of the year. So today's positive job report, we have to kind of take it with a grain of salt, right? We ultimately have to see this in more of a progressive manner, to understand how that will really translate into the next tactical proactive steps that the Fed needs to kind of focus on going forward. So going back to the technicals, with respect to recording time of 9:57 a.m., we are at 12:50 basically. And on the technical front, you could see that we've been trying to sustain to be going up to the next level of 1250, but any support becomes a resistance, any resistance becomes a support, and it seems like we cannot break above to the next level of 1250. So you can see that clearly we have crossed up for quite some time, and it seems like we are forming a plateau right now. At the moment right now, we can see that we are looking to kind of consolidate and kind of plateau upward after we hit the 57 out of 70 mark, and then going down to the next level of 48 out of 70 on a daily perspective. Weekly has been very extended, so this doesn't look that good to us. It does need to kind of consolidate, and then potentially cross down from here. And then on a monthly, it is looking like we've been plateauing for quite some time, but the daily and weekly still need to align on both fronts, right, for us to triangulate into a golden cross collectively, which will take some time. So ideally, again, right, Q2 to like early Q3 will make a lot of sense for us. Bitcoin is doing something very similar, like plateauing on a monthly perspective. Weekly has been very elongated. You could see that with respect to the level that we're at right now, 35 out of 70, going up to the next level of 42 out of 70. Daily it is looking like we are about to cross down. So you could see that with respect to the resistance level that we have met already at 50 out of 70, it is about to kind of come back down now. So this seems like we're forming an apex already. So coming back to a lower level, 16,500 all the way down to, let's hope that we do not break the 15,500 again, because that will form a continuation of the descending trend. So let's just hope that we can sustain above, but what we need to do ultimately, just to make sure that we can propel continuously going forward, is the cross down and then cross up, right? So daily, weekly, monthly all need to align on fronts. And then take a look at the index. You can see that today is a relatively green day because of the positivity that we're seeing from the job report. But again, this is relatively not the most direct correlations to the upcoming CPI report because and obviously the FOMC meeting, which we still need to kind of understand how are we gonna be trending this year. How did the last couple of months and the rate hikes been working, right? We've done the 75 basis point 4 times, the 50 points basis point 1 time based on our recent rate hikes, and what will be the next one, and what will be the foreshadow outlook for the economy as well. So that's something we have to kind of figure out. And also, obviously, tax season, the trade war that we're still in, the COVID situation that we in on domestically but internationally as well, and the Ukraine war. And last but not least, more directly onto crypto. Seems like there's just more news around Celsius. Obviously, FTX, we saw that what happened. But seems like it's still a lot of Wild Wild West out there. So that doesn't convey a lot of confidence from investors either. So I appreciate you. Have a good day, and I will check you on the next one. Take care.